Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, commodity prices are rising today. But first, February data highlighted a setback for the American factory sector, with growth rates slipping back again after the slight rise seen at the start of 2016. The latest surveys point to the weakest overall improvement in business conditions in just over 3 years. In Europe, the story was similar, but with notable price falls. In Japan, it was similar again, with only marginal growth occurring. Prices are more stable there. If you don't like banks who make increasingly big profits, then you're going to love today's HSBC results, which report a slide in profitability and a loss in their fourth quarter. This is a globally important bank with less than $200 billion in capital, but liabilities of more than $2.2 trillion, meaning that if the value of their loans to customers and other investments falls only 8%, their shareholders will be wiped out. Still, that is not too different to the big Aussie banks. Without big profits, confidence leaks. Without confidence, they're toast. Bank leverage is a tough mistress. In Australia, the price of iron ore, the icon weak point of commodities last year as world supply overwhelmed demand, has clawed its way back above $50 a metric tonne. The rise, which was unexpected, not only looks like it will hold, but is now above what the Australian federal government assumed in its last budget update, so it will surprise on the upside for them with their tax revenues. Behind this price rise is rising volume demand from China. In New York, the benchmark US Treasury 10-year yield is marginally higher by 2 basis points to 1.76%. Yesterday, local swap rates rose even less, up just 1 basis point across the curve. The oil price is higher today at $31.50 a barrel in the US, while Brent is just on $34.50 a barrel, aided by the release of a major report. Globally, growth in the oil supply has plunged as an extended period of low prices takes its toll, so says the International Energy Agency in its medium-term oil market report. But while American light, tight oil output is falling steeply for now, the market will begin rebalancing in 2017, they say. And by 2021, the United States and Iran are likely to be the leading production gainers amongst non-OPEC and OPEC countries, respectively. The gold price is $12 lower today at $1,212 an ounce. The New Zealand dollar is up 1 cent this morning, the US is falling, and the euro even more. The Kiwi dollar is now at 67.2 US cents, at 92.8 Aussie cents, and at 61 euro cents. The TWI will start today at 71.8. Most cross rates are now back to where they were at the beginning of January. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.